Welcome back to the Escrow. My name is Paris Coleman Smalls. I'm a realtor and broker owner of Coleman Realty, and I'm back with my guy Otis. Today we're going to talk about what is needed to actually get a loan pre-approval. So for a traditional buyer, what type of paperwork or what do you need to see from them to get them a solid loan pre-approval?
Great question, because lots of people have that. I don't know. I need to see your history, etc.
Exactly.
So for your traditional buyers that have a regular W-2 job, right? That means you earn a salary or hourly pay. What we're going to look for is the last 2 years of your W-2s, your last or two most recent paycheck stubs. If you're W-2, we don't necessarily need your tax returns, right? Because your income is verified by the pay stubs and the W-2s. As well as the last two bank statements or asset statements or where you plan to use the funds from for the purchase, copy of your ID and social security card, and a completed application. And that's pretty, that's standard for your W-2 buyers.
It's an easy client.
Easy peasy.
If you're working with someone like me, who's an entrepreneur and
Right.
business owner, what would I need to provide to you?
Oh my goodness, shame on us, right? No, a little bit different in terms of qualifications. Now, if this person is looking for a traditional mortgage that's a self-employed or business owner, for them, we're going to be looking for the last 2 years of their federal tax returns, as well as a CPA letter, right? Let's say if you're buying in the middle of the year, we will get a audited CPA letter to make sure that your income is keeping up at the same pace that it has been for the last 2 years. If you're 1099, we'll look at the 1099s as well. But if you're self-employed, and let's say, like, for instance, we have someone, realtor, right, like yourself, sometime those tax returns aren't indicative of the income.
A lot of
that
deductions.
right, because there's tons of expenses as a realtor, right?
Yeah.
And so in that instance, we would look for a non-traditional mortgage program where we wouldn't look at the tax returns, right? So I do a lot of bank statement loans for people like realtors, right, where we will look at 12 months of your bank statements, the income that you use, and we can utilize that as your actual income. If you are self-employed and you are earning income this way, we can use that on a bank statement loan, right? So if bank statement loan, 12 months personal bank statements, we get to use 100% of the deposits, okay? If it's business bank statements that we're going to be using, we get to use 50% of the deposits, unless you go and you pull up with another CPA letter showing that your business expenses are less than 50%, we can increase the income. So lots of different opportunities. We got to get
different options.
Yeah, we got to get creative for us.
For sure. And how does credit come into play? Like, is it differ for self-employed versus a W-2 buyer, or it's like a standard minimum?
Yeah, the credit's more so based on the loan product versus the borrower individually. So
makes sense.
FHA, VA loans, government-backed loans are a lot more forgiving in terms of the credit score. You can purchase with the FHA loan as low as 580, still with a minimum 3.5% down. For a conventional loan, a little bit more stricter and conservative on the credit scores, where they're looking for a minimum of 620, and it's going to be tough if you're at the 620 conventional loan. So it's more so on the product base versus the borrower's employment.
Makes sense. All right. Well, you guys heard it. Reach out to Otis if you have any other questions about getting your pre-approval, and then come to me, and I'm going to help you buy a house. Thank you.